Joining us now actually to talk about it is Bilal Little. He's president of DFD Partners, a distribution platform provider for asset managers. Welcome back, Bilal.
Hey, how you doing? Happy New Year to you.
Happy New Year to you. So, of course, you know, we're seeing this controversy between Genesis and Gemini, really DCG and the Barry Silbert and the Winklevoss brothers, play out into the public. For the time being, markets are trading flat. But does this have an impact given the role of DCG in other ventures such as Grayscale, such as, what happens if things go wrong with DCG?
Yeah, look, I think right now this is a headline, not a headwind for the markets, right? So that's why you're not seeing much movement here. Again, this is the issue and the problem when it comes to centralization as well as lack of accountability due to the lack of regulatory clarity that we still don't have in the marketplace. Unfortunately, this is a bit of a shouting match and pointing of the fingers, somewhat of an industry. I'll call it soap opera. It's unfortunate that it has to happen because it's playing out on Twitter when we have these two very important companies, I'll call it three very important companies entangled and sort of a bit of a debt-based scandal. And unfortunately, this is the challenge. You got 340,000 investors that are impacted with over $900 million worth of investments, right? So there's an issue here, but I don't think it's going to be a headwind for the marketplace at all. Again, it's just a headline today.
Yeah, and to be sure, they're seeking arbitration, which is a little bit different than going to court. They're trying to get this done as quickly as possible. I guess it seems as if everybody recognizes that if this drags out too long or if it becomes a legal proceeding, it actually might have a negative impact on crypto, correct?
Yeah, look, it could, but at the end of the day, I think the crypto market is actually trying to find some footing and look to the industry for some positive news. I think this still stems off the back of the issue with FTX as far as liquidity goes, right, and accountability. I think those two go hand in hand, especially when you're dealing with any type of debt and investor lockup periods. But what's happening right now, and I think this is what we should be paying attention to, is look, we're coming off a period in time when the market had to flush itself, and essentially that's what you saw in 2022, and you'll still see some of that in 2023 in the first half. But quickly, you'll see the market turn towards, I'd say a positive sign, and that's going to be the Bitcoin halving in 2024.
Is there a sense that there could be further crypto contagion ahead, or have we reached a bottom?
Personally, I don't believe we reached a bottom. I still believe that there'll probably be one or two more big headline issues that will drop and that will cause some continued impact on the marketplace. But after that, I think, once we hit somewhere in between, I don't want to call any prices, but call it 12 to, 13,000 or so, we should have a pretty good flush of the system, and you'll see opportunities as people continue to build.
And how are the institutional and retail investors differing in their outlook here? Obviously with the new year, what people always think about, okay, what do you expect the next 12 months to look like? I wouldn't have asked, I think most people wouldn't have expected we'd be in this spot one way or another 12 months ago. But 12 months from now, what are the expectations, I should say? What are the expectations that we know of so far between the institutional and retail investors?
Yeah, look, to be honest, you could just probably check Google Trends and you can see that crypto is not trending pretty high anymore right now from a retail perspective. But I think retail, right, that's always a fleeting trend. I would never pay attention to that. I would always pay attention to what the institutional folks continue to do. And at the end of the day, they're still building. They're still utilizing this as an opportunity. And I think you'll also continue to see some big help from the political arena as well. When you start looking globally at what's taking place, you're looking at a country like, Fiji, looking at making Bitcoin legal tender. You look at Canada, right? They're still thinking about and trying to find ways to accept Bitcoin as payment. You look at, the new senator of Ohio, right? He's known as he's a venture capitalist, but also holds over $250,000 in Bitcoin and crypto assets. So I think you're going to continue to see support for the space. And I do believe sometime at the end of Q1 going into Q2, when the Fed does pivot, that you'll see a nice move to the upside, both in equity markets as well as crypto. I think this is a fantastic opportunity to continue to build your position as prices have been suppressed.
You said when the Fed does pivot, it shouldn't. You're not saying if the Fed pivots.
It's not even an if. It's definitely a win. It's a math problem. They can't continue to raise rates to where they are right now, right? It's not actually a Fed-driven issue that we have right now. We have a supply-demand issue, and right now there's a supply constraint that's really fueling inflation, and that's going to lead to both macro and market volatility. But what you're going to see is the Fed is going to use the only utility that they have, which is raising rates, to try to slow down inflation and to continue to tame it. And we already start to see that inflation's rolling over today.
Right, but nonetheless, I mean, this perhaps the Fed will at least slow down on its tightening, but that doesn't necessarily translate to the go-go years of the pandemic when the Fed couldn't keep its printers running fast enough and they were like dumping dollars at like everyone's doorstep. It's not going to look, I assume you don't expect it to look like it did 2 years ago, 2.5 years ago when that happened. And so does that, between that and also what happened with FTX, do you think that while there might be continued institutional interest in crypto, do you think that at least some of it got dampened between those two events? In other words, that we're going to see this kind of, no matter what, we're not going to see the kind of craziness that we saw back in the past. And also we're not going to see interest in crypto, given that they've proven they don't know how to do due diligence to save their lives.
That's putting it politely. No, well, let me just take the second part of it. Yeah, let me take the second part of the question first. So the institutions will continue to build because the technology and the utility of it is better than what we have today. So no, I don't believe that stops. That only continues to accelerate. Now, what needs to accelerate also is, and this is what I continue to say, is the regulatory clarity that we need. And they're just trying to play catch up right now, and they can't continue to lose that position. So they need to get on one accord, get some rules of the road for us to continue to invest in, right? Call it a spade, a security, and let's move forward. And I think the industry would embrace that and continue to be excited about the opportunities of this technology. So that's one. The other thing that you brought up is an interesting point as far as you can't use the same old playbook going forward in 2023 and going forward, right? So the old adage of buying the dip and just hoping that things work out and play and continue to move forward is great. That's not going to be the case. You actually need to constantly evaluate and consistently, I would say, check the temperature of the marketplace. And we're looking at a market today that is focused purely on data. And the data is not a big tailwind today, but at one point it will move to becoming a tailwind and less volatility. And again, I think that's going to happen at the back half of 2023.
I want to pull at a string you mentioned earlier in the interview, which is that crypto hasn't seen a bottom. So what would be the catalyst to bring it a leg lower? Would it be the problems at Genesis? They've halted withdrawals. Their two biggest clients were FTX and 3 Arrows Capital. They both collapsed. Could it be GBTC, Grayscale? We're seeing record high discount on GBTC. That's usually an indicator of what institutional investors are thinking about in terms of crypto, and seeing it as an all-time low is a pretty bad sign. And of course, both these companies and CoinDesk are owned under the DCG umbrella. So do you see points of weakness there? And if so, which one is the weaker link?
Yeah, look, I don't think it's actually going to be based off of what the information that we know is today. And that we know that right there's issues around liquidity and both accountability there. But I think, you're going to start to see either bankruptcy and or fire sales within the mining space. I think that's going to be a positive sign for the marketplace, especially as you continue to see consolidation there, right, towards the back end of the year. I don't know why the headlines weren't as big, but there were several smaller and mid-sized miners that were talking about financial issues that you can point to, and I think that's going to be a positive sign. At the end of the day, I believe that, there's going to be more confidence coming to market when the market starts to realize that there's, again, a supply-based issue when it comes to the amount of Bitcoin that are out there, and investors are going to start to pile back in when they feel that the price is probably much more indicative of what the fair market value is.
Yep. All right. Well, we have seen Compute North, a miner, go bankrupt. Bitcoin miner Core Scientific just got a $17 million loan from Grayscale, so they're restructuring, but continuing to monitor that space. Bilal, we'll end it there. Thanks so much. That was DFD Partners President Bilal Little.